Good morning, good morning. How you guys doing? Can you guys confirm to me that you can see my screen? I'm just waiting. Oh, okay, yeah, you should be able to see my screen. Good, good, good. How are you guys? Good morning, Friday morning. We're just about to enter into the weekend, but before we do that, we have NFP. Big moment. Lots of traders are looking at their screens watching NFP. Watching to see if it's positive to buy, negative to sell. Can't do that. A lot of times you're not gonna be successful in your trades. And why is that? Well, this goes back to a discussion that I was having yesterday with a trader on Twitter. You know, it drives me crazy every time I see this. And throughout my journey of learning to trade the financial markets, I've come to learn a lot of things about the markets. Okay, it's amazing what you learn when you really commit yourself to studying something and really grasping what's taking place. And I'm talking about the conventional wisdom when it comes to trading. The conventional wisdom is that you don't know where price is going to go. You have no clue what's going on. So you throw in a bunch of indicators, you throw in a bunch of moving averages, and you're kind of hoping to God that, things are going to play out, based on certain patterns and price touching the Bollinger Bands and price touching the bottom of a wedge formation and price touching, whatever it is that you have drawn on your charts. And then you come up with some kind of a method that every time the Bollinger Band gets hit and you're above the 20, SMA or EMA, that you take a trade. And then your exits are the opposing whatever. The idea is you find some kind of methodology in the madness, okay? You're supposed to find something that's high odds within that madness of hundreds of indicators, hundreds of things, thousands of ways that price can be playing out. And then because you don't know what to expect, you just throw the dice in and hope that, during the numbers game, you're going to win more of those trades than lose. I mean, that is the biggest loser mentality I've ever heard in trading. And, no offense to anybody that trades like that. I get it. I mean, you come into the trading world and this is what you're bombarded with. Book after book after book. And, this is what you learn. So you think this is what trading is all about. This has not been my experience at all. At all. If I place a trade in the market, it's because I've located an area where the big institutions are buying. And so therefore price is going to go up. There's logic. There's reason behind everything I do. And I don't just think that the big banks are the ones that control price. I know it for a fact because I've seen it for years. And I've been able to predict markets for years with accuracy unlike you've ever seen before. It's because when you're able to locate the exact area where big institutional money is coming in and you take a trade off of it, magically the trades work. So, I mean, this whole idea of, rolling the dice, it's, in my opinion, can it work? Sure. If you're one of the lucky ones that are able to figure out in the hundreds of thousands of ways that price can play out, in amongst all these contacts with indicators on your chart, if you've come up with a way that wins you 50% of the times and you're happy with that because you're making a 3-to-1 trade, so most of your trades are going to be, making more money than the losing trade. If that's the route you want to go, then so be it. But then you ask yourself, these traders who have been trading this way for years, why is it that years go by and they still don't understand how the market actually works? Why is that? Well, because when you're always following your indicators and all this other stuff, it's not reality. I mean, let me ask you something. We're asked as traders to accept this, but let me ask you something. What if you got sick and somebody told you, oh, just go to the doctor and he's going to randomly prescribe you something and it may not work or it may work. And if it doesn't work, you come back and we randomly prescribe you something again and it might not work. So we'll randomly prescribe you something again. And it's like, 50% of the times he's going to get it right, 50% of the times he's going to get it wrong. Would you want to treat your body that way? Or would you rather go to somebody who understands how the body actually works? You tell them what the problem is. They ask you a bunch of questions. They figure out, they study you, they figure you out. They figure out exactly what's causing your ailments. And they put together something custom tailored to you and your needs and your body. You take it and it's successful and the problem goes away and you're healthier for it. And not only that, but you learn something new about your body, something that you didn't previously know, something that you can apply in the future. So if you ever have that issue again, you know exactly what the cause is. You know exactly what got you there. You know exactly what you need to do to fix it. And not only that, but you can help other people when they have the same thing. I mean, which one sounds better? Okay. And this is what I see so much in the trading community is this type of nonsense education. I call it nonsense education because once you understand the reality of the markets, it's like, it is nonsense. Anyways, 20 minutes. We have non-farm payrolls. Okay. So, previous was 97,000. Okay. Consensus is 139. So what is it going to be? Lower, positive, negative? Okay. So to determine that, let's start by taking a look at the dollar and see what condition it's in and see what's been taking place. So I look at the monthly time frame. I see monthly supply above price. I see monthly demand below price and prices in the middle of the ocean. What does that mean? Well, these are concepts that you have to learn. Okay. If you don't understand these concepts, you should learn them. You have to look at it this way. When a ship docks, okay, and refuels and people come on board and, new supplies are brought onto the ship, it's in dock for a reason, okay? There's a purpose for it being in dock. Once it leaves the dock, it has a destination, okay? When it's in the middle of the ocean, this is what price is right now. Price hasn't left a dock, okay? When we look at price, we could see that, let me point something out to you, okay? It dropped from here. There was no dock here. The dock is here, okay? Just like the demand zone dock is here. And the last time price went up was here. There was no dock here, okay? So when price shifts in the middle of the ocean and changes direction, it can go anywhere. It could shift back because look at what price has done on the monthly time frame. It's gone down, it's shifted up, it's shifted down, it's shifted up, it's shifted down. So there's no longer term direction. Each time frame represents a direction of price, a momentum for a certain period of time. So over the very long term, we don't have direction because there is no dock that we've just left from. Weekly time frame, look what happened over here. We had price dock at the supply area and price dropped. It came down, just fell short of hitting the demand zone, but it's almost like it's too shallow there. So the boats were sent out, loaded up the ship, and it went up to where? Supply. Reached the supply dock, it went down, came back, refueled, and then continued down. Now we're down here. Same area that we were before. So what's the likelihood? Okay, the likelihood is we see price action moving higher. But because it's a weekly time frame, we're looking at medium term. Medium term. When this data comes out, there's going to be a short-term move. Short-term. So it could be up, it could be down. All right. So you'd have to look at the lower time frames. So I gave you very long term. I gave you medium term. Let's look at short term. Short term, what do we see? A demand area has been removed. Another demand area has been removed. Is there any supply areas up here? Not really. But we have this area here. This area here, this zone is called a switch zone. This is what we teach. Price fell short of it and dropped. Do we have demand down here on this time frame? No. So it's kind of in the middle of the ocean too. If price was inside here, for instance, okay, and we had NFP coming out, regardless of whether the data would be negative or positive, price would 98% chance drop, okay? Doesn't matter what the result would be. Price would drop. But more likely than not, the result would complement the supply or demand area that we are in play with. That's why throughout the years, you've seen me, when it's the correct time, before the data is released, NFP data or the interest rate data is released, I'm able to predict the movement of price. It's not that I'm guessing. It's not that it's hitting a Bollinger Band. It's not because it's hitting the underside of a moving average, okay? It's because I'm looking at the buying or selling areas of the institutions, figuring out what's their bigger picture, what's their big purpose here, what's their agenda, and how does this fit that agenda? And that's why I'm able to predict. People look at me and they're like, how the hell did you do that? Well, it's because when you understand what's going on, you look at the big picture, you could tell where price is going to go. All right. So listen, no supply or demand in contact here. So we go down one more time. So look at this time frame. This is the 4-hour time frame. Okay. So let me do some analysis here. And I see we have supply up here, which is pretty high up. And again, we're not in that area. Any demand down here? Not really. Not really. Okay. So we have a supply zone that was recently removed here. And we have a new area of supply that was formed. Okay. So if I was to make a trading decision based on what I'm seeing on the dollar, not good. Doesn't look good to me. All right. So let's go to the euro. Euro. So we had that short trade. I fell short of hitting the target. If you didn't exit down here, you're in trouble because the momentum was shifting. If you look at the 15-minute time frame, you'd see the momentum was shifting to the upside, giving signals that price was going to shift momentum. Let's look at the daily chart, okay? So here's the docks that I'm talking about. As you can see, it fell short of hitting the dock, reversed, and started heading up. So it hasn't actually contacted a demand zone, all right? And now that we're up at these highs, is it contacting supply? No, it's not. Let's look at the 4-hour time frame. Is it contacting supply? No, it's not. Supply is actually a little bit higher. So what could happen? What could happen is data comes out and it's negative, and we see the dollar drop, and we see retail trader getting super excited. Like, you can see them all. I mean, it's just predictable. They're all out there saying, we're going to trade NFP. And if it's negative, we sell. And if it's positive, right? Like, this is what they do. It's the most simplistic way to trade. But because most traders have no real knowledge of how to trade the markets, they're just grasping at anything that they can. So they think trading is so simple that if the data comes out negative, they just sell, and the trades are just going to magically work. And if it's positive, they're just going to buy, and the trades are going to magically work. Well, if it's negative, then people are going to be buying the euro. And if it goes up, it's going to go right into a trap. Okay. Everybody's going to be running right into this trap. And I've seen this a million times. I'm not saying it's going to happen this time, but I'm saying that if it was to rally, if it was to be negative and this was to rally, it would be rallying right into an institutional supply area. So you know what would be happening? Retail traders would be buying. It enters into supply, and guess what? The banks come in, flood the market with selling, reverse price, and drop. Okay? This is what would be happening, all right? Anyways, that's it. I'm going to leave you with that, leave you with those thoughts. Pay attention to what happens. Pay attention to the data. Pay attention to the zones. This is the closest zone that I can see that could potentially come into play with the release of this data. And keep your mind open. Don't be so quick to believe those people that say you can't determine what price is going to do. It's nonsense. And I prove it every single day. This is why I share all the knowledge and share the zones and the trading and the forecasts with you guys, because I want you guys to see that there's a different way to trade, that there's a different perspective that you can have in the markets. And when you have a different perspective that is that gives you good results, you're going to build your confidence, you're going to see the results, and you're going to trade better. That's what I'm here for, is to help you guys trade better, okay? Stop following the nonsense. Learn something different and actually trade better. All right, guys, that's it. Watch for the economic data to come out and then watch what happens, all right? You take care. Thanks for joining me. I'm going to continue streaming for members only. If you want access to the members only version, go to Twitter, like, retweet our post, and one of you will gain access. All right, that's it for now. You take care.